Good afternoon. This is Tony Cherniawski with the Practical Investor LLC. Today is July the 19th, 2009, and the question for this video is a turn at hand? This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. A purchase or a sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment you may consider. You cannot invest directly in an index. Well, good afternoon and welcome back to my office. I would like to just review what happened in the last week or so when I discussed the Head and Shoulders program pattern on the S&P 500 index. Unfortunately, a lot of other people recognized it at the same time, and that made the pattern vulnerable. These patterns can fail, although the failure rate is fairly small, but with enough notice, a lot of times patterns are best utilized when they are stealthy, which means that not very many people recognize them, and therefore they're not subject to attack by big money trying to make the market do other things. So this one had lots of activity, lots of press, and it even hit CNBC. So with that in mind, I hope my program never goes to CNBC. I just don't want to see my patterns blow up too often, and that's just part of what happens with technical analysis. So without any further ado, let's just go right to the markets themselves and give us a picture of what's going on here. What I would like to do is first bring the NASDAQ 100 into focus, and I'm using a weekly chart here because I want to describe what we're seeing here in the best possible light, and that is we have a trend line coming down from the May 2008 as well as the August 2008 highs. That was the first major decline, and we can see that trend line in the last week has been met one more time. So this is the third touch on the trend line, and yet the trend line hasn't broken. And so what I want to do is just point out, even though the NASDAQ 100 has made a new high, it is still within its trend, and that is something worth noting. Now let's take a look at the Standard & Poor's Index. We're seeing the same thing here, but I've left another line that we've discussed in the past, and that is the resistance line that goes from the January 2009 highs. You can see here that high on January the 6th is intact. What happened is in June we had 2 weeks of, actually 3 weeks of testing. 1 week we were above the line just for a couple of days. Above the 943. In fact, our high was 956. And then right now we're back up to 940 with a high on Friday of 943. So we're right back up to the January 6th high. Now simultaneously, we've also hit that trend line again that the NASDAQ is at as well. So what we've got here is a confluence of two trend lines, two resistances, if you will, that could be stoppers to the market. Now, let's take a third view for a minute, and what we'll do is we're going to look at the VIX, the Volatility Index, and the Volatility Index is an inverse relationship to the Standard & Poor's Index, or rather the New York Stock Exchange index. So what we have here is again a decline. Instead of a rally here, we've got a decline down to the trend line, which we touched and in fact started to bounce from on Friday. So this is very key right now because we have trend lines pretty much in agreement. We've hit a support on the volatility index. As the volatility index rises, markets go down, and vice versa. As markets go up, the volatility index declines. So what we have here is an inverse relationship and a trend line that we've hit this last week, and now we have to see how that resolves. just for information purposes here, what I'd like to say is the resolution isn't over yet. We really don't know, but we should, in just the next few days, possibly by the end of this week at the latest, if we see the markets continuing to climb, of course, then we'd have a trendline break. This is very bullish, technically speaking. I'm not at liberty to say what I believe on that, but it's a possibility. We have to look at that. At the same time, if trend lines hold, this could be very bearish for the markets, and you should be very aware of what's going on. So let's go back now to the Standard & Poor's and then to the NASDAQ. And the Standard & Poor's again, we had a high of 943.60 on Friday. And so let's make sure that that is something that we're watching very carefully this next week. Now on the NASDAQ, we had a high of 1527 and on Friday, and again we might see a point or two yet in this rally, but for all intents and purposes, if the trend line is going to hold, the rally is pretty much over. So we could probably find out fairly quickly tomorrow how these things will happen. Now what I want to just add to this is that I'm not advocating the buying or selling of any security. What I am doing, though, is making you a little bit more alert to what's going on in the market, a little more educated, if you will. And what I would like to do is at this time just suggest that those of you that are interested in following the market on a day-to-day basis, you subscribe to my newsletter. You can reach me at tonyc@thepracticalinvestor.com, or you can go to my website, look on the bar across the top, the far left under company. You'll see other services, and the newsletter is listed, as well as my Form ADV Part 2, which is the registration as an investment advisor. So you can find all of these things on my website, or again, contact me at tonyc@thepracticalinvestor.com. Just be aware that markets can change very quickly, and as we knew last week, it looked like things could go down some more. Instead, they reversed up very quickly. This can happen at any time, and as a result, just be careful, and by all means, please do the right thing, and I look forward to talking to you again soon. Thank you, and have a great week.